Hello, my name is Paul Long, paultlong.com, and SBA lending with Gesa Credit Union here in Washington State. And I am here with,
Seth Rudin, business broker and commercial real estate broker with IBA. We've been around since 1975. We get to celebrate our 50th birthday next year.
that's awesome. Congratulations, by the
Yes.
way.
Gregory Kofsky did that, not me.
Oh, okay. Well, hey, we are just two people that are really big in the M&A space, and we like to share what's kind of going on in our mind when it comes to M&A. And in this sort of video, we are going to talk about the issues you face with commercial leases when you're buying or selling a business. And boy, there's a lot of fun in this. The biggest thing that I want to make it very clear is if you are buying a business that has lease space, please start working on your lease negotiations at the beginning of the process. Those who wait in the middle or the end, oh my gosh, it will absolutely slow that down. Have you seen that,
We
Seth?
may not agree on this.
Oh, that's even better. Go. What's your side?
I do agree landlords are important and their schedules are busy. I
Okay.
do agree that um, if you trust your landlord and you feel that they're solid, you can talk to them up front and let them know that, hey, we're for sale.
Okay.
However, if your relationship with your landlord is contentious and you're worried about long-term renewals, if you're not successful in the sale and now you've alerted them that you're trying to sell, you may have disturbed your
Ooh.
relationship with the landlord. So each situation is different. I typically wait until I have a signed legal documents before I engage the lawyer in order to protect my client's interest in having a long-term
Interesting.
sustainable relationship.
I love that. And I look forward to hearing some comments down below from people that have had those types of situations. So, again, there's always two sides to a story. So, thanks for sharing that.
Sure.
Generally speaking, though, our landlord friends are fairly slow at responding. Would you agree with that, Seth?
They're turtles. I had an experience, my first deal, I applaud him for taking care of his daughter for his wedding, but not for 3 months.
Yeah,
He
no.
disappeared for 3 months and the deal obviously died. And it was a friend of my client, and he
Oh,
couldn't even
wow.
get a hold of the guy. Every day we were sending letters, emails, texts. We tried everything, but he was in the middle of some ocean. We couldn't go get him. So
Oh, wow. Oh, geez. That's definitely an interesting one. So, the bottom line is there's three different main types of leases that are out there. So we have our triple net, we have gross, and then we have a percentage lease. And I'm sure both of us have seen all of these. So, as a triple net lease, that's where you have a monthly payment and then your percentage of insurance and taxes and all the other things. So that way, those are definitely the most common that are out there now and the most encouraged by the landlord because it really reduces a lot of their financial expectations on that. Anything you want to add on a triple net lease?
basically the tenant's in full control. It's usually for a single tenant building, like a
Yep.
manufacturing warehouse. They're using the building, they're putting the wear and tear, so they're paying the maintenance, the property tax, the insurance, and whatnot.
Mhm.
They're in full control of the building, and that's why and generally your base rent's adjusted a little bit to make sure that you can get to the market rate.
And then you have a gross lease, which is like, we'll call it a residential lease. If you went to go rent an apartment, I pay $5,000 a month for blank term. Pretty darn simple, right? And then there's a percentage lease, and you don't see it too often, but it appears mainly in the retail. I've seen it in restaurants, where where the bottom line is you have your monthly rent, whatever that may be. It may be a triple net, it may be a gross, but if your sales are over an X percent, then the landlord gets a certain percentage
I think
on
it can
that.
work in multiple ways. I don't mean to interrupt
Okay,
you.
no, go for it, please.
Yeah, sometimes it's just a percent of sales.
Okay,
They look at
yep,
the business and then they take a percent. Typically, you'll find it in a mall, a strip mall, and you'll see it in
yep.
restaurants. Sometimes with negotiations, it'll be, I'll pay you this much, and if it's over that, then you'll participate in usually in a declining percentage, those types of
Hmm.
things. Going back to the gross lease, that you're
Yeah.
basically saying that the landlord, right? So the gross lease is you pay one payment, and then the,
Mhm.
the landlord is handling all the maintenance. That's usually in a multi-tenant building sometimes where it's hard to distinguish the cost between the different office space or
That's a
rooms,
good
whatever
point.
it might be.
Perfect. So, terms are really important to me as the SBA lender because the length of the lease or the options have to match the SBA loan term. So, let's say, for example, you have a 5-year lease with two 5-year options. Well, that's technically 15 years that is available. Well, if I have a 10-year lease, I know that my customer is secured during the term of my lease. So if you say, "Hey, Paul, I only got 3 years left on my lease and the landlord's not willing to renew," if
Mhm.
it's a very dependent business of the location, it could kill a deal. Anything to add on terms on that one, Seth, from your side?
It usually those are pretty easy to get as long as
Yeah,
the buyer has strong credit. Now, if it's in a building that they want to eventually tear down and redevelop,
that's
then I just negotiated a 2-year term because the idea is we'll sell the building and tear to a developer who's going to tear it down in an area where
Mhm.
they're seeing lots of redevelopment.
Absolutely. And again, if you have a business that's not really dependent on location, then it probably shouldn't kill the deal. But if it's like, I don't know, I'm just going to use a restaurant for example, you're kind of dependent on that location. So Seth, how do you vet the buyer's experience financial strength on a lease?
Very important. I have a story to go with this too.
Ooh,
So first, we're interviewing to see make sure they can run the business that we're selling,
sure.
right? And obviously they got to be able to manage the business, have the working capital, keep the oxygen going so they can run the during volatile months and whatnot. And then we look at their balance sheet and their personal financial statements, similar to the way a banker does. Oftentimes, like we've done in
Mhm.
the past, work with the banker himself and saying, "Hey, I have this client, and I'm applying that same thought process to it." And then once we're ready to introduce the buyer to the tenant, I'll have them put together a package and present themselves in a professional manner so that some landlords, will sit down and have you present a business case and be very strict and you really got to pass
Save
the
it.
test. And others are like, "Hey, if you approve them, Paul, as the owner, I'll approve them because I've known you for years and you've done it. And if you're happy with them, I'll do it." It all works.
They
So my
just want their
story.
money. It's pretty simple. Yeah, I want to hear the
Exactly.
story. Sorry.
So my story goes that I had a buyer of a business that was sort of having some challenges financially, but it was a great business, lots of opportunity. I found an international buyer who had over 25 locations around the world, had lots of cash. Some of it was not inside the country though.
Ah,
And the landlord did not like that. So
mm,
we had to do a sale leaseback with a sublease agreement, keeping the owner unfortunately on
ooh,
hand because the landlord would not approve the deal, no matter how much we tried to get it past the finish line.
ooh.
And that we got the deal done. The buyer's doing great, the seller's happy, he's getting paid. It's a unique situation, but it's getting done and everybody's happy and everybody got paid what they were expected to. Just it was clumsy and it was mistaken, my opinion, on the landlord. He should have approved because the current tenant, the seller, was a weaker financial candidate actually on paper than than the buyer. The buyer was actually a stronger candidate.
But a lot of the money was international, so that kind of,
Exactly. Or it was invested in operations when most of their locations are
oh,
in the United States, just happened to be.
got it.
Yeah.
Interesting.
Yeah.
How about personal guarantees? How does that work?
Oh, personal guarantees. You're going to give your lifeblood to the
Right.
landlord if you fail to make the payment. If the buyer, usually it's the seller puts the personal guarantee or the tenant puts their personal guarantee,
Yep.
right? And they guarantee themselves, to make payment, which gives the rights to the landlord if he has the courage to say, "Hey, I'm going to take your house or all your savings or whatever it is to get paid." They have that right when they do that. So it's
Yep.
something that's hard to get, approved. But if you
Hmm.
want the business to believe in yourself and know you're not going to let it happen, the first
Yep.
payment you should make is to your landlord, so you don't have that issue.
Well, I would say your
outside of your
SBA
employees. Your
lender.
employees get paid first, and then make sure your
Oh,
landlord.
I guess that, and then your SBA lender, and then your landlord. I'm
I'll let
kidding.
you work that out.
So one of the things also that's on leases is a landlord agreement, because at the end of the day, we want to make sure that, especially on lease property, that we can go in and take our assets in the case of a lease default, loan default, all of that, right? So that's an important thing. Now, a lot of times a landlord will take the form that the bank gets, sign it, and be good. Another half of them will get an attorney and redline the you know what out of it, which we have all seen that. Um, and you know what? At the end of the day, you do what's right for you. But what's interesting on those is the definition of a fixture is always what it comes down to. Because a landlord, let's say, for example, let's just say the HVAC system. Is the HVAC system mine or the landlord? Well, I'm going to go with the landlord on that one. And that would be considered a fixture. So when I do a fixture filing, they want to make sure, hey, bank, you don't come and take my HVAC system, which we wouldn't. But that would be the case. So it's always interesting to see how that always comes up as the true definition of what a fixture is.
I mean,
Um,
anything like a trade fixture versus an an HVAC in that case would be if you are a hair salon and you installed the sinks that were
right.
custom for putting in the neck your neck, and they could take that out, but they're not going to take out the HVAC system.
Right, exactly. Like a restaurant. How about the hood, the
The
stove and
kitchen hood
such?
would definitely be a trade fixture, and that could be
I
taken.
would
Yes.
exactly. So it's always that's why the landlord consent always gets really fun. So I always appreciate those that just sign it and give it back to me. Those are the best.
100% agreed.
But as a on the other side of the transaction, I would be the guy with the lawyer.
Yeah.
So, yeah. So again, we just wanted to share with you some of those things when it comes to a lease. And again, if there's anything that I can help you with, I'm over at Gesa Credit Union, SBA lending. Would love to be able to help. And of course, Mr. Seth,
Seth Rudin, senior broker at IBA. You can find me at IBA Inc. or Seth at IBAinc.com. Thank you so much.
you bet. See you guys later in the next video.
Bye.